Welcome to TheoTrade. This is Don Kaufman. December 9th, 2020. About 15 minutes to go to the cash close with the monsters of tech really taking kind of a monster hit and being led to the downside in the Nasdaq, specifically by Tesla. Let's get to work on this evening's video and kind of break down a little bit of some of the action we see inside of the marketplace, which is, again, undoubtedly seeing sell-side activity, all led by, well, stocks that have done absolutely nothing over the last month. One of the first things that I want to point out before anybody gets ahead of themselves, I'm going to freeze the screen for a second here, and you start to break down a little bit of the marketplace. The S&Ps are down almost 1%, maybe got a little bit of a bid under them here, but the Nasdaq is specifically down about 2%. The Russell is almost unchanged, not much going on inside of the Dow. Stop right there. One of the most important things on the screen, again, is almost a 50-50 advanced decline line. Okay, we're not seeing the sell-side activity kind of proliferate throughout the marketplace. And although you may look at that as being a positive, it's a very large negative in that it's, if you look at this in terms of like risk reward and recognize, well, some of the risk inherently involved in this is you realize you can knock down the S&Ps by the tune of almost 1% with a little bit of sell-side activity to what? Come on, let's actually break it down here. Again, a little bit in terms of Microsoft, right? Microsoft's down almost to the tune of 2%. Apple, again, these are your monsters of tech. Little sell-side activity in Netflix. I mean, the sell-side activity in Netflix is negligible. It's just given back what it gained in the previous 2 days. You start to see Facebook hit with another antitrust suit, but that was kind of a knee-jerk reaction. It's bid back up off there. All right. Obviously, some sell-side activity in Amazon. As I said, these stocks, they have done absolutely nothing throughout the course of the summer till effectively right now. I mean, 6-7 months of just nothingness. You're seeing a little selling going on over here. Google, a little sell-side activity, although this is just off its recent all-time high. But a lot of the sell-side activity and really the impact that you're seeing bottom line into the Nasdaq is very much specific to Tesla. But the reason that I'm going through there a little bit one by one today is what people are kind of missing. Again, you can really have a very broad-based impact right now to the S&Ps with, again, very concentrated sell-side activity. This is something that I've just warned of incessantly in this marketplace, that effectively, you get what? A handful of stocks with this kind of market capitalization. Okay. And look, you have the energy sector today. It's going to finish the day flat to slightly up. Okay. The financials, which I'm going to come back to here momentarily, they're finishing the day largely unchanged. These are key sectors, okay, that are either flat to ever so slightly bid. You look at individual stocks like Caterpillar, the thing's actually up, again, just shy of 1% on the trading session. So the damage that is being done today, okay, as I said when we kind of kicked this off, it is not proliferating to the rest of the marketplace. And again, therein lies kind of the risk in the days to come. So big tech weighs on the market. Again, Tesla specifically on a percentage basis is getting whacked back. And this is something you guys know that I've traded quite considerably. There's a couple of videos last week, really, again, specific to Tesla. The one key point, beyond that this is just isolated here, okay? The question is that isolation going, again, to spread to the rest of the marketplace? And for tomorrow's trading session, that's when you really want to start to key into the financials. I'm telling you right now, this is and holds the keys to the marketplace. The S&Ps, right? They rallied on the back of these financials. Take a look again at the S&Ps, and in this case, I'm actually going to pull up the spiders. Okay, just a blistering move to the upside, roughly speaking, from what? November till the current time. This is a move from 320 in the spiders, okay, to roughly 370 before pulling back. Okay, just unencumbered, again, ripping run to the upside. Was it the monsters of tech that got us there? Absolutely not. Again, if you look at the monsters of tech in that particular time frame, they're largely unchanged, right? So again, a huge amount of the S&P's movement to the upside It's right here. It's found inside of the financials. And the opposite is also going to be true. You see that sell side activity hitting, again, the monsters of tech. All right, you see the sell side activity hitting specifically Tesla, which is not necessarily in our monsters of tech equation. Okay, and yeah, it has an impact to the S&Ps, but I'm going to say it again: the S&Ps, okay, they're not going demonstrably lower unless the financials really start to break. Okay, it's the financials in the next trading session and Thursday and Friday, again, that you have to key into as a trader. And when you start looking at this from I think like a ticks kind of perspective, the irony here is like the Russell ticks, these things are going to finish almost positive on the day. And the reason I'm looking at the Russell ticks, the Russell is just filled, okay, with like regional type banks, which of course leads us back to the financials. All right, so switching gears here just a little bit. Again, the weakness, very, very specific today, a handful of major tech stocks that are actually bringing the S&Ps down. Again, it stands to reason, though, that could actually spread. The other thing that I like to do kind of midway through the week, I like to give you what we kind of term orientation of where we are on the week. And when I talk about like orientation, that is in reference to the SPX, the mother of all products. So the SPX started, off the week right at about 3,700. Now we were looking for, roughly speaking, this week about a $65 move to the upside or, a $65 move to the downside. Where are we right now in the week? Well, we're not, but basically not even halfway home. So again, we started at 3,700. We're sitting here at what? 3670, about halfway home. So you got to recognize that this marketplace, because we're already actually stretched to the downside, we can almost put a target on the back of what? All right, let's actually key into this level right now, which is what we kind of term, all right, the lower expected move in the SPX for the week. And it is 36, again, 35 is the lower edge of the expected move. So the reason we like to kind of delineate that lower edge of the expected move, if we see any more sell side activity, as I said, paint a target on it. The only way, though, that we're going to see, again, that 36.35 is for the financials to actually break down a little bit. Speaking of the financials and tech, I'll deviate for a moment before I go any further. Anything I mention here, I always like to display where I have positions and where maybe I do not have positions. Many of you know, if you kind of follow along here at TheoTrade, that I wear my positions pretty much out there for everybody to see. One of the first things I'll mention, I did completely bail out. This working order down here is just a small spread that's left over, but I did in fact bail out of long IWM positions. I was long the IWM for a considerable period of time. This is actually my accounts totaled up over here. I am completely beta weighted. Again, kind of wearing my position in front of you here. I'm now short about 3,400 SPY deltas. Again, I am no longer carrying a long IWM position. And one of the reasons I'm also bringing this up, I am now officially short, inside of the XLF. I'm short, literally 1,000 shares of the XLF in here. There's easier ways, of course, to get short the XLF. You can use duration positions. Nevertheless, I wanted to display that because my discussion, of the financials, I think is kind of, left in question unless I'm willing to actually obviously sustain a position. So not only am I watching the financials, because again, the financials I think hold the keys to the S&Ps, but I'm short those financials, looking for them to break back to the downside. And again, that kind of demarcation line on the screen here is about 2650 inside of the financials. All right, so I wanted to cover that because I think it's of critical importance that is a relatively new position for me, being short the financials. So I bailed out of all the long Russell positions. I also went through and kind of discussed, I bailed out of a lot of my long positions, coming into earlier this week. And, just because there's some sell side activity today, that's not at all vindication, right? I actually opened up and I'm now taking a lot larger short delta position in the overall marketplace. Okay, as I was saying, kind of getting back into it here, there are some other signs of risk in the marketplace outside of the fact that we're seeing some sell side activity in the monsters of tech. Just a few things to kind of be aware of. Okay, bonds are not in play right now. Okay, as where we're kind of like what we term risk on, risk off. And what that basically means is there's some sell side activity in the S&Ps today. Okay, but nobody's flooding out of the S&Ps to buy bonds. In fact, the bonds are actually down today. So there's no risk, if you will, being displayed, okay, as people rush into bonds. I can tell you right now, I don't think bonds are going to be a great hedge if the S&Ps sell off. I mean, if the S&Ps were down 200 points, maybe the bonds would be up a little bit, but bonds just do not seem like the great hedge anymore that they once were. In fact, and this is one of the reasons I wanted to talk about bonds, okay, over the last few days, people all of a sudden now are moving back into the dollar. And this is big, and this is also well worth watching. If the dollar continues on this upward trajectory, I actually think this is actually acting a lot like the new VIX. So the dollar and a bid under the dollar, that's buy-side activity in the dollar, could actually mean more sell-side activity. The last thing I'll actually leave you with in today's trading session, there is some very substantial movement on the volatility front. The VVIX, okay? I mean, yesterday it was all the way back down to the 100 level. Today, we're back in 115 land, nosebleed land. Anything north of 110 on the VVIX is what we call the VAMA zone, which is an area where, I mean, yeah, you literally have to get under your desk, duck and cover, because this happens to be professionals that are coming in right now and starting to mitigate their risk. The VVIX is representative of, okay, the volatility of the VIX itself, and that has picked up quite substantially. So as we come into today's cash close, you got a little bit of a bid back under the marketplace. Maybe it has legs, okay, for the time being. But again, everything tomorrow was a reset. Watch those financials carefully. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.